Good morning, everybody. Today is Thursday, April 23rd, and this is the pre-market analysis for QOL Trading. And getting right into it, let's just see about what we have on for earnings calls for today. We had our big call yesterday for Tesla. We'll go over that shortly. Today, American Express, American Airlines before the open, that happened. Not sure what happened there. I anticipate the future outlook right now for the airlines industry is I think jet fuel prices are going to impact things, so that's going to be a problem for the airlines. Or actually a problem for consumers. They're going to start jacking up airline fees. After the close today, you have Intel. I don't see anything else in there today. Tomorrow, I don't see anything else in there either. So that's pretty much it for the earnings excitement for the week. Getting into it right now, let's start with the VIX. Again, if you're new to the channel here, as usual, subscribe to the channel. Hit that thumbs up button, like this video. Go down into the description area there and join our trading community. We're doing live trading from 9:30 a.m. to 11 a.m. Eastern time. And everything is going through third-party WAP, but it goes through our Discord. It's just all it's all a processing fee. But anyways, you have a gap up here from the 17th down at 1750. There's still some gap downs from April 8th, 2574. That's above the 20 and the 50-day moving average at 2231. Respectively, kind of in the 50s right on top of that. And then there's one more gap down at $30.34 from March 30th. That still probably will need to get filled. So we are, we're still in between these averages here, little dangling just above the 20-day moving average, sitting at $18.26. So still kind of flat, but I would anticipate that there's going to be a little excitement going on over the weekend. I think that there was a little activity yesterday in the Straits. I think I read this morning, I don't know how true it is or not, but Iran attacked 3 boats and I think took one boat captive, and I'm not sure from who. So we'll have some more follow-up on that. So that being said, let's get into the ES as usual. Actually, let's start with the oils. So you got a little spike there, and I think that this probably came on that news I just said about Iran having some conflicts in the Strait yesterday. So spiked a bit at 106, kind of hovering above the 20-day moving average, $100.63. So it is above $100 a barrel right now, and I expect this to probably be a little inflated for the time being while there's still negotiations trying to happen for a ceasefire. As much as I would like to see a ceasefire, I've just been watching this going on for going on 5 decades now. Anytime somebody wants to have a treaty or ceasefire out there in the Middle East, nothing ever seems to end well. Always good intentions, but fingers crossed. Hopefully it does end well, but we'll see what happens here. Especially right now, I think that the regime for Iran right now is fractured right now, so that I don't think they really know who is in charge. I think that's the biggest problem right now. So nonetheless, I think that the U.S. understands that, so they are giving a little more time before they advance more on military strikes. So we are above the 20-day moving average at $100.64 a barrel. I would like to see that drop below and get closer down to the 50-day moving average. We do have a little tiny gap up here. I would say, that's relevant. So hopefully something will happen positive over the weekend and we get some, some more positive news out of Iran and Pakistan there, and then we can move forward and everybody can get on with our lives and oil can get back to normal and we won't have to pay $1,000 for an easy trip on the airlines here. So let's take a look at crude. Crude is the same thing. It's probably a little elevated. This gap down was filled. I'm going to take this off the screen. So so same thing, still sitting in between the 20 and the 50-day moving average on price per barrel. We are below $100 a barrel, which is good. And this is all this crude oil is impacting the United States, so that's good here for the U.S. Kind of like, right now it's in a consolidation pattern, right? So everybody kind of sitting and waiting. Did have a little bit of a gap up here. There's still a little bit of a gap, sitting here from, I would say, what date is that from? I would say that's from the 17th as well. So there is a tiny little gap up that could potentially fill if we do lose the 50-day moving average at $85 a barrel and change. So that would be good. So hopefully if some positive news comes out of Iran this weekend, this will definitely fall pretty heavy. So let's get into the ES, and then we'll get moving along here. ES, everything is consolidating right now. Everybody's hanging out. All-time high 71.85. You can see right here, not really making any kind of move here at all. Let me just expand this out a little bit here. Let's give ourselves 20 days. That should be enough here. So you can see, as you take a holistic view out here, really no big moves. You made your highs, your all-time highs here on the 17th, and it's just kind of it's in a waiting pattern right now. So we do have a lot of areas that some back end filling I would like to see. Nothing has changed from the charts from yesterday and from all week. You do have some open point of controls down below, so I don't want to get crazy here and just start sounding like a broken record. But take a picture of these levels that we have here. It's the same thing. Nothing has changed. We have not broken out into new highs, and we still have this 72.3641, which is an extension of a Fibonacci, 127% extension, because we do not have any higher levels up here to chart at this level. So would like to see some pullbacks to these levels and fill some back ends. I would say today, if you lose yesterday's low, we did lose the low yesterday. So this is probably going to be a pretty big level for today. I would leave that on the charts for today. This will be your line in the sand, 71.4650. If you lose that level, then you're going to start coming back down here, and you'll start looking for these lower levels here to come back and sniff out. 70, if you lose 71.4650, 70.89 is your previous all-time high, first level from the 16th. Then you have a point of control open, 7,069.45. And then below that, you have a regressional trend line sitting here at 70.58.87. And then, of course, we have these point of control levels that are open that are it's not too common for point of controls to be open on the broader markets. But there's one that's sitting here from the 13th at 68.57.77. So that level here, and it's lining up with the 100-day moving average, 68.69. So it would be healthy for the market to get a little pullback. Good earnings. Yeah, you know what? I know, by the way, I know I owe you some levels here that you requested last week. I'm going to put those levels in our Discord channel, in the levels channel. I know I owe you levels for Microsoft, UNH, MSTR, and FISU. I will get to it. Getting back to the Musk earnings call yesterday, I'll get into that in a minute, and I'll talk about why it's pulling back right now. So anyway, so take a picture of these levels right here. These levels haven't changed. They're not going to change until we get some kind of earth-shattering news to move us out. So I would like to see some pullback. I always say pullback is healthy, especially when you're stepping higher like this. You want to pull back. We are extended from all of these moving averages here. You get that pullback, and then you can push higher, right? Because it's not healthy to just go straight up. There's a lot of money sitting on the sidelines right now too, because they're looking for levels to get in, and they've been saying that probably since right here. Oh, I'm not going to enter here. I'm going to wait for it to pull back. Maybe they had their chance right here, and then right here, all-time highs. I don't want to get in here. I'm going to wait till it pulls back. Well, they never got a chance. They kept saying that, and they keep saying that all the way up, right? And it's just a nasty thing you get stuck into. Somebody told me a long time ago that when you start trying to time the market, and let's say you put yourself in 100% cash, it's very difficult once you pull yourself out to get back in, right? So, and this is probably what's happening to a lot of people that are sidelined with a lot of their money. So anyways, I don't want to babble. So let's get into this and plow through this. SPY is going to be the same thing. All these charts are going to be the same thing. I looked at them quickly this morning. We'll go to the 20-day consolidation, people. That's all we're doing right now. We're consolidating. We're looking for areas for pullbacks. There's an all-time high sitting up there at 312.39. And then our extension, I don't know if I got my extension up here for this. I thought I did. Let me just see here. Yep. 734.01 is the 127% Fibonacci extension. So that's what I have on the upside there. So ideally, we want to get our pullbacks down on the downside. And like I said before, not too common. We have these open point controls on these the broader markets and then the SPY and on the Qs as well. So take a look at these levels. All my red lines that I have here are previous highs. Okay, if I have them marked in green, they're lows. So this, and then if it's a yellow here, it's a point of control level. So right now, I'd like to see, you have, I would say here's your low from yesterday. This would probably be your line in the sand for today. If you lose this level right here, 708.89, you come back down here to 702.78. And then below that, I've got this midline regressional trend line sitting here from October 13th of 2022, sitting at 700. 700 is your psychological level. Any kind of even number like that on any stock is always going to be a psychological level. You'll always get some kind of reaction one way or the other. That being said, here's your money shot right here, 682.26. Open point of control from the 13th, sitting right above this 100-day moving average at 681.57 too. If the market pulled back there, I'd be looking to get long there. That's what I would do. And again, do your own homework. This is not financial advice. This is all education, people. Remember, I don't want you coming back saying, hey, you told me to do this, right? Anyways, getting back to the NASDAQ here. Again, if you're new to the channel, subscribe to the channel. Hit that thumbs up button, like this video. Come on down and join our trading community from 9:30 a.m. to 11 a.m. Eastern time by hitting that link down below. NASDAQ, same thing on the NASDAQ. Let's pan out here, give ourselves 20 days. Okay, 20 days on the NASDAQ, same thing. So the NASDAQ is interesting though. So all the rest of them were kind of consolidating. Well, this, with the NASDAQ, if you take a look at it, it's kind of like it's kind of consolidating up, right? So I think with the NASDAQ, I think it's got some room. That's just my opinion here. I could be dead wrong. We still have, same thing, we still have these open point of control levels that are still open here from the 15th at 26,181.18. And then we have one from the 13th that's open at 25,310.68, which aligns with the 20-day moving average at 25,287.11. Very important levels right there. When you have different levels that are in confluence, those are very strong levels. So if you're trading and you're using those levels while you're trading, those levels are, that gives you confidence to get into your trades. Now, everything is all about probabilities. So when we get to the upside here, same thing on the upside. I have nothing on the upside other than this 127% extension on the Fibonacci at 27,931.17. Okay. So that's the level on the upside. So I do like how the NASDAQ is kind of holding up. Same thing. For the NASDAQ today, maybe a pullback long from if it pulls back to this 26,901.75 for today. But I would say that, same thing on the NASDAQ today. Downside maybe come into play. If you lose this level here, it was kind of, it's kind of like a break in structure from yesterday, 26,957.25. Pay attention to that level. If you lose that level, and then of course, if you lose this 26,901.75, I think you got a clear shot to come back down here to this 26,569 level, okay? Then previous all-time high, 26,399, and so on. So take a shot of these levels that I have here, people. I put a lot of time into these levels, so if at the very least, take snapshots of these levels, put them on your charts, okay? And then see how they work for you. So what I do, and I was saying this yesterday in the pre-market yesterday, I leave these levels up here and I see how they perform. So these levels that I have up here, so here is an all-time high from the 16th. I put it up here. I left that level in here. Now look at how this level was responding beautifully, right? So this was an all-time high right here from the 16th. Boom. Break it, retest, retest, retest. Beautiful level, right? So we're leaving that up here. This 26,569, beautiful level, right? You see how it's responding right now. So what happens? If the market pulls back here, I'm going to be looking to take a long here. Or better yet, you could play it as if you lose this level, you take your short, you have your stop up here. If the market continues to push, take your short and take it down to this level, right? So there's all kinds of ways you can manage your trades, right? So anyways, let's get into the Qs, then we'll get on to Tesla, and then we'll get on with our beautiful day here. I finally have a decent day where I'm living here in Chicago. Got a 70-day weather here. I do not want to trade long today. Qs, same thing on the Qs. I think the Qs are probably going to show pretty similar as the NASDAQ. Same thing. So consolidating, but consolidating a little higher here. So yesterday we made a new all-time high, 650, 634. I like that pop there. Here, same thing on the upside, 674.49 is our 127% Fibonacci extension. On the downside, same thing on our downside here. We do have some levels that it held here. So now here's a perfect example. I have this midline regressional trend line here from April 5th that I drew, and April 5th of 2025. So we broke above it finally. Okay, it was starting to give us a little resistance here. And now right in here, it's holding that level. And I like that. I like how it's holding. You see where you go back and you follow this line and you see what it does at these certain levels. So it breaks this level, lost the level right here, was respecting it right here, got above it. See how it's kind of gravitating to this level? That's how you look at your support and resistance levels and find out if they are if there's any leverage on these at all. Okay. Same thing. Look at this all-time high from the 17th. You have the all-time high right in this area here, popped above it, respected it, pre-market respecting it. Now, pre-market, I don't give a lot of validity to pre-market, right? Because down here, this is where you make your money, right? You follow your volume down here, not your animation up here, okay? This is where you got to pay attention to. And we're also pretty extended, so you got to watch everything. All of our, relative strength index levels are all very extended, so pullback, I think everybody's kind of waiting for a pullback, and I think a pullback is going to be healthy. So that being said here, we do have these open point of control levels. I think we do have one for the 13th as well. 614.31 point of control level. Watch that level. I think you pull back down to that level. It's sitting just above the 612.04, which is the 100-day moving average. I like that level. If you pull back there, I like the longs down at that level. Okay, so take a snapshot of these levels. It's right, it's a cluster here of all of our moving averages. You have the 200-day moving average, the 20-day moving average, the 50-day moving averages. Boom, right there. The market likes to gravitate into some housekeeping to these levels. Okay, so that being said, let's get over into Tesla. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. Tesla, we watch Tesla do what Tesla does. Giveth and taketh away, right? Rips your heart out. So, I was actually excited for this. Yes, what I'm seeing right now. I did not want to see Tesla go all the way up. Why? Because when I'm talking about housekeeping, a certain housekeeping that I'm looking for is for this last point of control to fill for us down here at 334.07, and this is for September 4th of last year. If we could get this filled, we almost had it filled. When did we almost have it? Recently, as a matter of fact. I thought we had it filled. We got down to 337.24, and I would have been very happy. And then I would have been very happy for Tesla to continue to rise, right? So let me let's go up here. We'll go. I think 90 should be fine. So yeah, so right here we almost got down here at this 337.24 back on the 7th of this month and touched this and cleaned up this 334.07. So that being said, now what happened here, and if you've been on the channel before, I talk about speed zones all the time. So right now what's happening with Tesla is we are in this speed zone here. So let me pan out a little bit. So on this day, you go straight up. So if the market's going straight up with no sellers, what happens? It's going to reverse itself. And these buyers right here, the people that got long, are saying to themselves, oh no, I am long. What am I going to do? And then when you lose your certain levels, and that certain level is this 381.80, and I think that's where we're at right now, 381.80, we are now in the process of filling this speed zone here. So let me just, right? So you can see this here. And where is it coming into line here? Where does that come? Right at the 20-day moving average, 369.53. Now, does this mean like, oh, right when the market opens, oh, let's sell short right away? No, because it doesn't mean that. You know, it very well may get down to this level, and it certainly looks like it wants to. It doesn't mean it won't rally up first to certain levels and then hit your level and then get everybody long up here and then sell short, right? That's what the market does. It tries to create liquidity to go in the direction that the institutions want to take you. So right now, I'm not gonna, I'm not gonna lie to you. I hate that expression, by the way. That's why I was stumbling on my words. But I do like Tesla to continue to go south. Why? So we're talking about the earnings. So earnings, typical Elon, very positive. However, there is nothing different about Tesla than the rest of the companies out there. They are all huge on their CapEx right now. And CapEx, for those of you who don't know what that is capital expenditures. So they are all dumping a ton of money into their companies and for the future. Billions of dollars. I think Musk said that they originally had 20 billion for 2026, and now it's up to 25 billion. However, he says that it's going to pay for itself tenfold, more than tenfold. So Tesla, the robotics is going to be probably the best product ever out there, out of all products. So you're either a Musk and a Tesla lover, or you're a hater. So me, long term, I love Tesla. I think Tesla is going to be a fantastic company in the future. However, living through the hurdles of it's rough. I mean, if you lived through last year of Tesla, everybody said Tesla was absolutely done when it was trading at $200 a share. And then it ended up rallying, and then by the end of the year, it got up to $485 a share. So when I say I'm excited for this move right now, I'm very excited for this move because I want this housekeeping, this 334.07 to get filled for us. Why? Because if I go and clean this up here for us, here's our point of control chart. So these point of control, so this one was open from September 11th of last year at 365.83. This was filled. Okay, this was filled on March 20th. And that's why I wanted that's why I wanted this 334.07 to be filled too, but it didn't. It only got down to 337, so it did not get filled. So it's still open. Now that being said, we definitely have we have a lot of point of controls that are open above us. So this point of control here at 388, this was filled on the 15th, right? So when we went down to 337. It then rallied back up and then filled this 388 and then filled the 397. So those are $60 moves, right? So we still have an open point of control of 455.12 from January 5th of this year and 478.39. That's open from the highs of last year. So I'm very excited for this, right? However, as long as this gets filled first, I'll be very excited. I do not want to see us fill these first with this still open, right? So that's why I was saying, I don't know who I was talking to yesterday. I may have been talking to my brother, and I told him that I want to see this fill. I want to see, after the earnings call today, I want to see Tesla pull back first before we go higher. I don't want to see this fill first. I want to see this fill first, give us some nice, tidy housekeeping, and then us take off and get above all, the 200-day moving average and the 100-day moving average, and then we can get going. So right now, as we're looking at it today, you have to be thinking about pop and fades. And why do I say that? Because you lost the 200, you lost the 50. The 50, you can't see it, it's hiding at 389.15. and we're approaching this 20-day moving average right now. So this right now for me today, I am looking for pop and fade. So getting back to my trading chart, and I know my trading chart looks messy, but when I'm trading, this is what I have on my chart because I'm a scalper. And so what I'm going over every day, this is for scalpers, okay? Not long term. This is for your day trading, okay? So what I'm looking, ideally for me today, I'd be looking for a first, pop here. So this regressional trend line we lost. This was a higher end regressional trend line from the all-time highs. And we lost that yesterday. So this could be a level. There's a whole bunch of levels here I'd be looking at pop and fades. The ideal pop and fade would be this 385.30. If Tesla popped up here, that would be an ideal pop and fade. A better one would be 387.50. It's a monthly low from February of 2026. And I say this all the time. A monthly low is your strongest level. And then it'll go to a weekly low and then to a daily low, right? So that's why I have it a little thicker than a weekly low or a daily low, right? Because this tells me right here, okay, we're approaching a strong level. I also have some levels that we lost here. This is a 200-day exponential moving average at 390.59. We lost that pretty strong yesterday in the aftermarket right there. And then right here, if you pay attention, look at what's happening right here at this 20-day exponential moving average at 377.54. It's rejecting that level right now. It wanted to hold it. Look at how it came down here. I had this level in here. I did not do anything with this level. So it came down here, pre-market, post-market yesterday, popped up, and now here we are in pre-market right now. We lost this level, and now it's rejecting that level right now. So that's the level right now. You could go short off of that level in the open here, and then put your stop maybe right at this regressional trend line. But you don't have to go. You don't have to go hitting your buying your puts right out of the box. Let the market take its toll. I mean, let it settle down. So right now, right now you can see the target here for this 20-day moving average of 369.53. I do like this level here. If we did lose the 20-day, I do, your initial longs, I like this 364.46. It's a weekly low from March 16th, right? You also have a weekly high. So I do like a break and retest type thing where if you break a level from the 14th, so if you go out here, you could see we broke this level right here, and this could be your break and retest. Break and retest for those traders that know the break and retest. You break a level, you come back down, and you test it. You see how the market responds, and then you take it higher, right? Comes right in at the 20-day moving average. Not a bad level, right? So that's something you could play. A lot of different things you could do here. Take a snapshot of these levels, people. This level that I have right here, this 355.87, not a bad level either. It falls right in line with this regressional trend line here that I have from the all-time highs. Not a bad level at all. All good levels here. Take a snapshot. And we will move on. Let's move on to what we're going to do for today's trading. So for today's trading, we have tomorrow's expiration date. I'm going to start with 385 calls and 365 puts. It pretty much puts us $10 away from each of them. So we're out of the money on both of them. You can see the calls closed at $11.45, but now the market, took a big dump. So this is going to open up more realistically, and because now the earnings are over, there's going to be an IV crush. Okay, so implied volatility crush. It means that these premiums now are going to come back down to reality, right? So this 237 will be inflated now. Actually, a little bit, not much. Probably, I would say in the low threes. So we have 2 days now on these strike prices to evolve right now. So you're going to lose a little theta as the day goes on, but that's what I'm going to start with tomorrow for today, and I may switch that. If we go and look at what we typically do in the morning on our trades, this is what we did yesterday on our 5-minute opening range trade. We knew yesterday was going to be a kind of a choppy day because it was earnings call, right? So you did get a move, and if you can get your early move on an earnings call day, get out and be done, right? But, for the first part of the day, I would say for being earnings was not that horrible. So you had your range 385, call it 385 and change and 389. So you had about a $4 range. And then when you broke out, you had about $7, right? So you could have gotten yourself about $7 there, and how that equates onto your options. if you bought your calls, forget about what the premium price is there. You can figure about 45 to 50 cents for every dollar that the equity price moves. So if you bought a one lot, you would have made $450 on a simple one lot. So what I teach in the trading room is this simple strategy, the 5-minute opening range strategy, and then I talk about other advanced trades that I do. And then on the strategies, we talk about that your process stays the same, and as your account balance grows, you increase your lot size. So your process is always the same. And I always speak of that when I'm entering a trade, the first thing I'm looking at is not how much money I'm going to make, is where is my stop going to be. Your risk is the most important thing when you're trading, not how much money you're going to make. You talk about your levels of entry, and my levels of entry, I could teach somebody how to enter a trade within 30 minutes, and your entries will be spot on. It's all about managing your trade from that point on. Where you're going to put, are you going to be disciplined enough to take your stop when it drops below your level? Do you know how to scale into a trade and scale out of a trade, right? So there's all kinds of professional skills. I don't care what anybody says. It's a skill set to learn how to trade, right? And I've been trading for many years, both on the floor when I was down in the S&P pit from 1989 to 1995, where I was actually handwriting it, to off the floor to what I'm doing today. So anyways, that being said, if you are new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and then come on down, join that description so you can come and join us for the live trading from 9:30 a.m. to 11 a.m. Eastern time. If I don't see you in the trading room, have a great day, everybody. Keep it light. And then we will see everybody tomorrow morning for the pre-market again. Have a great